Hello, welcome back to Coinscrum's Meet the Founders series. I'm delighted to be joined today by Peter Habermacher, co-founder and CEO at Aaro Capital. Welcome, Peter.
Thank you, Paul. Thanks for having me.
Thank you for joining us. So Aaro are DLT and crypto investment experts. Before we kind of touch upon what it is you do specifically there, could you just maybe give us a little bit of a background about yourself? And we always like to hear about people's journey into the crazy world of crypto. So maybe tell us a bit about that too.
Sure, yeah. So before crypto, my background was in competition economics, mostly advising on competition concerns around large acquisitions and mergers in all jurisdictions and all industries. So back in 2014, when I first heard about Bitcoin, like many others, initially dismissed Bitcoin and crypto more generally as a passing fad with no real economic foundation. It was only in 2017 when cryptocurrencies were back in the news and Ethereum kind of caught my attention. And it was much easier for me to see and understand how this technology could be used in the real world, enabling automation via smart contracts and cutting costs. And this is when we locked ourselves in our offices and did a lot of late nights reading and writing reports, and really drilling down and understanding the technology and the value behind it.
Cool, thank you. And what was it specifically that inspired you to start Aaro then? What was the pain points that you identified and that you assumed needed addressing with this type of opportunity?
So I and the other co-founders of Aaro Capital entered the DLT and the crypto asset market back in 2017, looking to invest our own money. However, there was a lot of noise going around, and it became clear very quickly that the space moves 10 times faster than any traditional market, and it can be very volatile with 10% moves within a day. And so because of that, we sat down and we started calling fund managers who could do the investing for us. However, we were very disappointed, and we realized we were wasting the time with speculators in the Versace tires or tech guys in pink shorts, and they had very limited knowledge of how to run a fund or how to manage risk. It was hard to find managers who could offer the quality and the confidence that we wanted for our own money. And therefore, we spent over 2 years building a professional way to invest in this space that will give us the comfort that we required for our own investments. And just given how different this space is, we have built a ground-up approach from first principles, exploring how best to explore this opportunity set.
Yeah, absolutely. And I think that's always the best place to start from, that if you've got a distinct problem yourself, it's likely to become a distinct problem for other people. And we've seen over the last year with attention building and people realizing they do need to set up and take notice, kind of the need for expert advice and research and advisory is going to be paramount, really, as more people come in to enter the market and deploy capital in the market. So, I know there's a DLT Multi Fund designed for sophisticated investors, but more specifically about Aaro, could you tell us a little bit more in what it is in particular you're looking at and how you see the space developing, and what you're looking out for in terms of how you think that you can best exploit these opportunities?
Yeah. So on the development of the space, I'm going to give a multi-layered answer. We've spent a lot of time kind of building up our economic framework to ensure a robust economic story for this growth story over the long term. So as an overview, starting with the crypto assets, in 2021, we expect the crypto market to have an extremely strong year. Moving elsewhere into the wider story, over the next couple of years, we expect enterprise DLT to become a standard technology throughout many different sectors and with a proliferation of use cases. In the very long term, we expect public blockchains like Ethereum or successor platforms when permissionless DLT has overcome its current limitations to very much be the dominant technology used by blockchain, resulting in a very large price appreciation of cryptocurrencies over the long term. Coming back to the short term, so our analysis suggests that we're about currently around halfway through the current crypto market bull cycle, and we have proprietary indicators which have been effective at measuring the market health, predicting future market price movements, as well as predicting market tops over previous crypto cycles. And they're still very healthy, very bullish, and they also indicate that we're notably below bubble territory still, and so we expect a strong bull market in the short to medium term. On the technology side, we have very much gone on a mainstream economics approach to this space, and we've kind of worked closely with professors from top UK universities to really understand why this technology should exist and how exactly it adds value using more traditional economic frameworks. And we have come to the conclusion that cryptocurrencies are really core to the value proposition of blockchain and DLT. And the core proposition is decentralization. That's both for enterprise and non-enterprise use cases for this technology. And so while DLT is the technological innovation, crypto assets are the economic innovation, and they go hand in hand. So cryptocurrencies use game theory to align the incentives of participants. And this, so far, has been the only way we've seen to remove the need for a centralized entity to coordinate things. And this solves a number of key fundamental problems which we've faced in the economy so far. One is the ability to remove trusted intermediaries and basically just help cut out expensive middlemen. The second is something called the holder problem in economics. This basically enables multiple companies to work together more confidently and to undertake irrevocable investment together in mutually beneficial projects. And the third one is this disintermediation of network monopolies, providing a potential solution to the competition concerns both regulators and legislators globally have around the big tech giants and how they've managed to use their big network effects to their advantage and basically lock out the competition. And for those who are interested in finding more about kind of our thoughts process around this, we've got a number of economic white papers and quite a lot of thought leadership on our websites. On the best way to exploit this opportunity, there is a number of ways to access the DLT and the crypto asset growth stories. But the real challenge is being able to gain exposure in a risk-managed and dependable way. So we are arguably at the same stage of market development as the hedge funds were in the 1990s. And rather like then, those who are less familiar with the space would do well to seek guidance from those with the necessary expertise, or alternatively go for a fund of funds approach. So, for example, on the DLT side, we can go down the venture capital route by direct investments in companies and projects, or one can get access to the most exclusive VC deals by investing in the top VC funds in this space. And there is also the blockchain ETF approach of investing in public companies, best placed to profit from this technology. On the crypto side, there are also direct investments into crypto assets as well. A simpler route is investing into Bitcoin funds, and there are also index funds which can provide wider, more portfolio diversification. And finally, there are actively managed crypto funds. So every strategy available within the realms of traditional finance, from market neutral to long short trading to arbitrage to fixed income, also operate within this new financial asset class, but they are distinct from their cousins in traditional finance. Being such an early stage market, there are significant information asymmetries for knowledgeable investors in the form of inefficient markets and the potential for outsized risk-adjusted returns from effective asset management really is an order of magnitude larger than in traditional asset classes. So, for example, our economic advisor, Dr. Daniele Bonacci of Queen Mary University of London, he has co-authored a working paper on performance of crypto funds. And in this analysis, the average, for example, the average monthly Bitcoin return is 7% versus 7.5% for crypto funds, while the monthly volatility of crypto funds on average is 20% lower than Bitcoin. And the best diversified strategies have seen even better results. However, only a minority of funds can outperform passive crypto benchmarks and produce economically significant value for investors. But importantly, for active investors, manager relative performance appears to be persistent over time. And so we are convinced that good manager selection is essential to superior performance. And so in terms of a more diversified approach, there are three key advantages to a fund of funds approach to this growth story, DLT and crypto assets. First, they provide access to broad exposure of different active managers, specialising in different areas of this space. Second, it provides portfolio diversification across style, strategy, and fund structure, which can provide a good balance between risk and return. And the final advantage is expertise.
Yeah, thank you. And I will highly recommend the research papers that you do publish, both on your website, and you kindly offer us a subset for us to publish at coinscrum.com. So it's refreshing to see the quality of research that's now coming out. And I know that you have many of your research associates from academia have a broad coverage of experience both in traditional markets and this world. So I highly recommend that. And also it's refreshing to hear that, you do take this holistic approach where, private DLT solutions and projects and, more of the kind of innovative stuff perhaps in public blockchain space aren't mutually exclusive. And there's opportunities across both, because I don't think we see many funds looking across the gamut like that. And so, thank you for that detailed description, especially like elucidating how, your approach to risk and risk management and diversification. How are you, in terms of investors, what is, obviously there's an opportunity that's clearly there, but also, as you mentioned there, I mean, some of the returns being shown in a very volatile market, generally somewhat outsized to what some investors might typically expect. And, obviously that's a good thing in some ways, but also can engender an element of caution and suspicion about it. So how are you seeing the opportunity then from the investor's perspective as they look to tiptoe in and, at least start exploring opportunities here? Yeah.
So as you touched upon, there's a very broad and diverse set of opportunities in this space, both on the DLT and the crypto asset side. And just to make it simpler, we split the space into 4 macro buckets based on the different return profiles of different investment strategies. And the 4 buckets are market neutral, long short, opportunistic, and long term. So on the market neutral side, this is predominantly quantitative arbitrage, but there is also good longer term arbitrage opportunities, such as lending crypto assets to crypto exchange traded products, which typically trade at a premium to the underlying assets. There is the long short bucket, which is also predominantly quantitative strategies, alongside more long-term fundamental managers who trade over longer time periods with managed market directionality. There is the opportunistic bucket, which is quite an interesting strategy bucket, and its returns are largely independent and idiosyncratic to the overall market. So it has big portfolio diversification benefits. And then there's the long-term bucket, which is made up of the likes of thesis-driven longer-term strategies, such as crypto hedge funds, venture funds, private equity, but also blockchain ETFs, for example. So the investment landscape covers full opportunity set, everything from the 2-page white papers on initial coin offerings we saw in 2017 and 2018, to the more sophisticated arbitrage hedge funds, to mutual funds buying big band stocks who are implementing this technology and saving money right now. On the funds landscape, alongside your traditional fund structures, there is also hybrid fund structures which provide VC-style investments, but through open-ended hedge fund liquid-style structures. So a key aim of DLT and crypto assets is open finance to allow greater access to investment opportunities and to improve secondary markets for VC and private equity investments. And it is precisely these developments which allow for the shorter investment horizons of these hybrid funds relative to traditional VC. And as said, this universe also includes mutual funds exposed to the sectors and the companies that we expect to be able to generate sustained profits from this technology and this asset class over the long term. And then on the underlying assets, there are also, alongside all the crypto assets, there's also interesting idiosyncratic market opportunities such as mining, staking, or more recently, yield farming.
Yeah, sure. So, in terms of taking that regulatory approach with the level of interest and demand we're now seeing is obviously going to be widely appreciated. But we're still on the other side, and on the investment side, especially when we're talking about direct investments into crypto assets. Regulatory clarity is still building or growing or forming. And in traditional asset classes, that regulation and guidance is typically there already. What are the challenges in terms of you being able to conduct due diligence and at the same time offer that comfort to your investors in terms of the standard of due diligence has been applied to give them comfort?
Yep, so due diligence on kind of investments and funds is very different to the traditional space. In the traditional space, you have a large known universe of established funds on fund databases. So you can easily start off by filtering funds based on size, length of track records, and then do kind of quantitative analysis of ranking their returns, seeing how they're fitting within a portfolio. Kind of do some investment analysis to understand the general process. On the operational side, it's after, like at the end, and it's less of a concern as funds are run by big established companies. You know what you're getting. This space is very much like emerging manager investing. Track records are extremely short. Fund sizes are incredibly dispersed, and some of the newer, smaller funds are actually much more interesting than the kind of more well-known, large established players in the crypto space. So we have an approach of approaching things from ground up, sourcing funds from our extended network as opposed to databases. Due to the increased operational business risk of startup managers, we have an equal focus on the operational side of things while doing investment and standard quant analysis alongside it. Really, one of the most important considerations for investing in the crypto funds space is that operational due diligence is equally as important as investment due diligence. We also have to have a much closer look at the risk given the nuances and also the volatility of this market. It requires a much more detailed approach from both the investment and the operational side of things. and you have to go from ground up rather than top down. You don't have the regulators to kind of rely on to protect and provide a minimum standard in terms of the type of investment product you're getting.
And what about on the reporting side? Dealing with these smaller firms with certain kind of levels of market infrastructure and reporting requirements that aren't already there. How are you finding that?
Yeah, so we are kind of doing very in-depth monthly reporting and monitoring of our managers, which is extremely time-consuming to try and understand the risks that we are taking and managing them appropriately. And this obviously requires a lot of expertise in understanding what you need to ask for, what is normal, ensuring that we have the kind of appropriate kind of legal protections in the kind of offering documents for the investments that we've invested in.
Cool, thank you. So just moving back on to Aaro's approach in general, with a rather unique investment thesis and economic approach. Can you just tell us a little bit more about that?
Yeah, so it's such a new and exciting space. It's easy to get distracted and lose focus with all this shiny technology. And so economic analysis is required to make sense of such a complex and quickly evolving landscape. We believe that the focus always needs to be on the fundamental economic problems being solved. From this, you can identify the sectors and the use cases where the technology and the asset class will generate the most value. For example, McKinsey have identified over 80 use cases across 14 different industries, including finance, insurance, healthcare, supply chains, and digital identity. However, where this technology is applied differs from where the profits will be generated as a result. Long-term profit generation is largely determined by the competitive landscape at different stages of the value chain. So, for example, in European markets, where markets are more efficient, early movers can quickly capture large market share, but big bag consortiums applying this technology will face competitive pressures to pass on the cost savings to their customers. And the final consideration is the timing of these profits. As with every technology, there are important development and adoption cycles. Adoption and implementation takes time. Also, development is extremely fast in this space. So many new innovations have relatively short windows of opportunity for high profits before they get competed away as investors identify them. And further, the disruptors very quickly become disrupted as the core technology has multiple stages of evolution. And so the lucrative profit generation centers in this space are constantly shifting. And so you have to be able to identify them before the rest of the market start chasing them. And our ability to do so is a crucial source of our competitive advantage.
Great, thank you. So, as everyone knows, if anyone's been paying even slightest amount of attention to this space, the activity over the last year has been immense, and this whole institutional story has really kind of kicked in, and evidence-based as well this time around. How over the past year, since the time before that, since you were starting to establish Aaro, what is the typical profile of investors now, today, versus what it might have been even only 12 months ago?
So fundraising always starts with smaller private pots of money, but now we're seeing interest from large family offices and a lot of interest from intermediaries, from IFAs to multi-family offices to private banks, especially in Southeast Asia. We've even seen some interest from public and private pension funds, although it will likely be some time before they move into this space in any meaningful way, though there have been adventurous US pension funds that have already dipped their toes into this space. The UK market UK intermediaries have been shown interest, but less interested to invest as they have requirements of being on large UK fund platforms. That's how they operate here. But we have seen a lot of interest also from very large global institutions, and now some of them are having large internal crypto pushes driven by their most senior salespeople, which is very encouraging.
Yeah, absolutely. It's definitely good signs, and at least cracks in the dam are appearing, so to speak. And at least that ball is rolling, and we'll see how long it takes really for that to pan out. So I know we're short on time, so maybe just finish up and maybe look ahead a little bit. The industry as a whole has definitely matured over the last few years, but is still definitely in the maturing camp. From your viewpoint, what do you see the most critical challenges still faced by the industry as it continues along that path? And what needs to be addressed for this to really go mainstream in the coming years?
So the first thing is obviously regulation. Regulators globally have been working to get to grips with regulatory challenges raised by crypto in an effort to balance innovation with other objectives such as financial stability, customer and investor protection. There are a number of key areas where regulation is required to aid with market developments. First is to prevent crypto from being used for financial crime. Second is the concern relates to investor and customer protection. Third is cybersecurity risks. It's a major issue in this space, and in most jurisdictions, there's no minimum standard for cybersecurity that operators need to abide by in the crypto space. Fourth, there's as financial institutions are slowly entering the space, this creates potential wider systemic and macro-prudential risk given the high volatility of this asset class. Then there's the global stablecoin story and the potential challenges and risks this faces the wider financial and monetary system. And the final area is the potential for the up-and-coming DLT-based central bank digital currencies and the regulation that will be required around this. The next key point is infrastructure. So this is still an early stage technology, and there's still a lot of software infrastructure that is required to make this technology both easy to develop and to use for companies and individuals. One of the key issues that's often talked about in the crypto space is the scalability trilemma, and that's the trade-off between scalability, the safety, and the decentralization of a network. And also on the kind of supporting picks and shovels services, there's more development required around banking or, for example, the derivatives markets for crypto, and also institutional trading infrastructure. Another key consideration is usability. So the technology needs to be a bit more user-friendly, where one doesn't even realize that you're using an entirely new Web 3.0 internet infrastructure stack. At the moment, you generally have to be relatively technologically savvy to use crypto or a decentralized application. The final stage and the final consideration is just general adoption and acceptance by the public and the population more generally. And this very much is the most unpredictable part. The best technology is often not the one that gets adopted. So there are several key hurdles to overcome, such as having sufficient adoption by people that believe in the technology really before the technology develops to a stage where you can really have the full benefits over and above the already entrenched technology. And then also having sufficient publicity and PR to bring in the best talent and the capital required to overcome the initial high development costs and the experimentation and that's required to obviously help dissipate entrenched technology. But we believe that the DLT market sufficiently satisfies these requirements to be able to overcome these technological adoption hurdles for mass adoption.
Yeah, well, there's certainly enough there to keep everyone busy for the coming years. But the amount of mind share that's come into this space, and what we're seeing from firms such as Aaro in terms of raising the bar and in terms of their professional approach to this, I guess gives us some confidence that if everyone keeps their head down, we'll get there eventually. Peter, it's been fascinating to listen to you today. Thank you for sharing your thoughts. If people want to know more about Aaro, how could they get in touch with you?
They can get in touch via our website at Aaro.capital.
That's great. Okay, I recommend people do that and take a look. Thanks for joining us, and we look forward to seeing how you progress in the coming years.
Thank you, Paul.